So welcome to the volume spread analysis basic series part 3, and this series is all about weakness and strength in the markets. So basically we're gonna understand how to find weakness and strength in the markets. But before starting this topic, I want to talk about market phases. So basically, if you have an idea about market phases of these particular four topics, that is accumulation zone, reaccumulation zone, distribution zone, and redistribution zone, you can skip this part. But I want to complete this before starting the actual topic. So let's start with the market phases. So basically, there are four phases. So this is a particular chart for market phases. So right now I'm going to explain you all the four topics of market phases. The first thing is accumulation. In simple, market after a downtrend, the market's going to hold a particular levels. In terms, market going to go sideways markets. The market will stay in a particular range and it's going to give you a up move. Okay. So that's called the accumulation zone. In simple, the mechanism behind accumulation zone is nothing but after a complete supply being exhausted in the markets, the smart money accumulates all the orders to create an up move. So then demand starts, and after demand enters the market, market goes up. Okay. And reaccumulation, same thing. Sometimes market gets exhausted and it's gonna hold again and it's gonna continue its up move. Now distribution zone. So distribution zone is nothing but it's an basically accumulation zone. It's the opposite thing in which after a uptrend you're gonna get a sideways market, and markets will start absorbing all the quantities for a down move. Once, like, let's say smart money is buying this at this particular point and they're booking their profits and they're creating sell positions at this particular point. So it's exactly the same thing. After distribution zone, you're gonna get a redistribution zone. Market gets exhausted, it's gonna hold for a while, and they're gonna continue their downtrend. And again, accumulation zone occurs in the market. The same cycle continues again and again. So these are the market phases. In simple, I've explained you. Okay. Now to explain what accumulation and reaccumulation zone, I have given you a practical chart because I could have explained it, but to understand in a very clear way, I have given you a chart right here. This is Adani Ports 15-minute time frame. Now accumulation zone, downtrend, market hold it for a while and it started its uptrend. Again reaccumulation, market got little bit exhausted. It absorbed all the orders right here. You can see the low volume activity. It's clear sign that it's a reaccumulation zone and market started its up move. At the same thing, distribution zone, after a particular uptrend, you got a distribution zone in which market holded a particular levels, low volume activity, again downfall, again low volume activity, market started a particular holdings right here, and again redistribution zone occurred and market went on a downtrend aggressively. So these are the examples for market phases. Now let's get back to the main topic, the weakness and strength in the markets. So now one of the most important topic of the entire VSA, basically we're going to find weakness and strength in the entire VSA analysis. This is how we're going to trade. So let's understand what weakness and strength in the markets. Now weakness appears on an up bar. So basically in VSA, the weakness appears on an up bar. I already explained what up bar is all about in the previous video. Now in a rising market or a market which has broken out of a sideways range, when weakness appears on a chart, it will appear on an up bar and it will usually be high volume or ultra high volume, you can say that, because when smart money, the SM is smart money begins to dump their holding, their sell orders are coming in one after the other. That creates a ultra high volume. Let's understand this particular concept in the form of a chart. Let's just a minute. Now let's say that there is a particular level at this particular point. Okay. Now we have a particular range. Okay. Let's assume this is a complete sideways market and market is trading around this particular ranges. Now what you're going to get is you're going to get a breakout at this particular point. Okay. You're going to get an upper bar. It's going to break this particular levels, and the volume right here, you can see the volume. It's going to be a smaller volume, smaller volume, smaller volume all the time right here. And initially the breakout bars volume will be an ultra high volume compared to all the volumes right here. It's going to be an ultra high volume. Okay. It's going to be an ultra high volume right now. as a price action trader, what you're going to think about it? Oh, the range has been broken, we're going to buy it. So all the immature traders, as a like a newbie traders, the weak holders, they're going to start buying at this particular level, they're going to start buying at this particular levels. But as a, some smart traders, like let's say some price action traders who have experience, they're going to wait. Okay, what they're going to wait, they're going to wait for the market to come back. Okay, every single time they're going to wait the market to come back, and sometimes it might reverse from these levels or it might go down. In simple terms, in price action, people might call this as a false breakout, right? People might call this as a false breakout, but you have to understand this one particular concept, is that smart money starts selling at this particular point. Why smart money starts selling at this particular point? Because always when market creates a up bar with a ultra high volumes, it's a clear sign smart money's presence in the markets, and they starts creating sell positions again and again. Okay, they start sell positions, their sell orders, basically the sell orders will be executed like this. Once the sell orders are executed, it's going to be an ultra high volume. This is a clear sign that market is weak right now. We have to wait for a further confirmations, then we have to take a trade. Yes, definitely, as a trader, you can wait for it. Once market comes back, it's going to give you some signals at this particular point, then you can either take a trade at this particular levels. As a VSA traders, we have different types of entries, but we can look at later. But right now, we have to understand that whenever there's a ultra high volume with an up bar, it's a weakness in the market. And same thing goes with the strength also. Let's understand what strength is all about. Okay. Now, strength appears on a down bar. When strength appears on a chart, it will appear on a down bar and will be usually high volume or low volume. When smart money begins buying their buy orders, all coming in one after the another, that creates a ultra high volume. As same expected in the weakness appears on an up bar, it's the same thing in a down bar with an ultra high volume. Smart money starts buying at that particular level. So basically the weak holders, there's newbie retailers or like some price action traders, they get trapped at this particular point and they lose money. Let's understand this in the form of charts. So right now we are in the Tata Power chart. There's a trading view terminal. This is the Tata Power chart, and you can see. Let's identify the ultra high volume. This is an ultra high volume, right? This is an ultra high volume level. You can see the market created an up move, very aggressive up move, and then after an ultra high volume, market started going down. This is a clear sign that this is a smart money presence at this particular point. Again, same thing, ultra high volume, up bar, ultra high volume, widespread, and market started falling at this particular point. This is the sign, this is weakness in the market. It's an indication of weakness in the markets. Again, let's see another examples at this particular point. See, this is a down bar. Okay, this is a down bar. So basically strength appears in the market. I already told you strength appeared. What happened after a down bar? Market started holding level, it went up. Again, let's find some more examples. Again, same thing happened right this particular point. Look at this. Ultra high volume. Ultra high volume is nothing but comparatively there will be one particular volume which will be higher than all the volumes around it. Okay, ultra high volume, widespread, market reversed. Same thing right here. Ultra high volume, widespread, market reversed. It started holding for a while and then it went up. Sometimes this happens, okay, but on the overall cases, this is how the weakness and strength appears in the market. Okay, so I hope you understood what strength and weakness appears in the market. I have given you a very simple example. There are a lot of things when it comes to you can trade this strength and weakness. So basically we are having a ultra high volume this particular point. We can execute a trade right here. We can book our profits exactly at this particular point. We can do lot of things when it comes to price and volume. So I have given you a particular example. These are just basics. So don't take any trades based on strength and weakness directly. You have to understand the entries and exits. There are a lot of things. Then you have to judge whether you want to take a trade or not with confidence. Okay, so that's the weakness and strength in the markets. Thank you so much, and we will see you in the next video.